Ladies and gentlemen, thank you for waiting and taking the time to join us today. We will now start the press conference for NTT DATA Group financial results for the third quarter of the year ending March 2025. Let me introduce today's presenters. NTT DATA Group and Representative Director and Senior Executive Vice President Kazuhiko Nakayama. The Director and Senior Vice President and Head of Corporate Headquarters, Tadaoki Nishimura. Corporate Strategy Headquarters, Head of a Finance Department, Keisuke Kusakabe. I'm your facilitator, Fukunaga of a Public Communication Department. Today's presentation consists of two materials, financial results summary and an company presentation, which are available for download on our website under Investors section. Now, Mr. Nakayama will present the financial results for the third quarter of the year ending March 2025. Over to you, Mr. Nakayama.
I am Nakayama from NTT DATA Group. Firstly, thank you very much for joining this briefing session despite your busy schedule. Here is today's agenda. Let me first explain the results of the third quarter of fiscal year ending March 2025. Please turn to page 4. This is a highlight of the Q3 results year over year. Revenue increased by 231.6 billion yen. Operating profit up 38.9 billion yen. And profits attributable shareholders of NTT DATA Group were greater by 12.7 billion yen. New orders received 97.5 billion yen. Against the full-year forecast, all figures are on track. Let me cover details on each measure from the next page. Please turn to page 5. New orders received increased by 97.5 billion yen year over year. As per the Japan segment at the financial business, a major financial institution, payment and insurance clients awarded large deals to us, while the enterprise business and public and social infrastructure business performed strongly in winning orders, posting an increase of 76.2 billion yen. For the overseas segment, North America won a large deal, while Global Technology Solutions and Services, or GTSS data center business, was affected by the previous year's Q3 large contract win, leading to a significant drop. The overseas segment at large benefited from the forex impact of 147.8 billion yen and posted 22.1 billion yen surplus. Please turn to page 6. Net sales. As a whole, it was up by 231.6 billion yen year over year. For the Japan segment, the public and social infrastructure business scaled up its business for the central government and the agencies, lifting the sales, while the financial and enterprise businesses grew sales. The segment increased by 131.6 billion yen in sales. In the overseas segment, GTSS increased data center and SAP businesses solidly, while in North America, MEIL, APAC regions, each unit sales before forex impact were down. The overseas segment as a whole gained a forex benefit of 125.3 billion yen, delivering a surplus of 95 billion yen. Please turn to page 7. Next, operating profit. Operating profit grew both in Japan and abroad and recorded a 38.9 billion yen increase year over year. Japan segment revenue growth helped increase profit, while the red projects recorded in the previous fiscal year were absent, which helped the total of the Japan's 3 businesses to grow by 26.3 billion yen. Overseas segment, data center business, SAP and North America group profits. Also, previous fiscal year's structural transformation costs are no longer present. Therefore, profits rose by 9.4 billion yen. Page 8, please. Let me provide more details on the overseas segment. North America, net sales went down year-over-year. However, EBITDA, thanks to reduced overhead costs, increased. New orders received in Q3 recorded an over $500 million large deal expansion and increase from the previous fiscal year. MEIL net sales was affected by underperforming UK and Germany businesses and decreased without FX impact. EBITDA was pushed up by the absence of the previous fiscal year's structural transformation costs. However, sales reduction led to a profit decline. For APAC, the major business Australia lost a specific client and the consulting managed services struggled. Accordingly, both sales and profit were down. As per GTSS, Global Technology and Solution Services, both data center and SAP businesses continue to perform strongly. And it increased by around 20% in sales and 35% up in EBITDA. Please turn to page 9. Operating profit for this fiscal year is largely impacted by one-time factors. Therefore, these waterfall charts break down the Q3 cumulative results and the full year forecast versus fiscal year 24. The upper chart of the Q3 shows major one-off factors, including structural transformation costs in the previous fiscal year, which raised Q3 profits by 19.5 billion yen, and strategic investments and business integration costs, which reduced the Q3 profits by 10.9 billion yen. The bottom chart against the forecast shows the absence of the Q4 data center sales and incremental strategic investment and business integration costs. So the full year profit impact is expected to be 37 billion yen. Therefore, in Q4, with those temporary factors reflected, we aim to deliver the full year guidance. Please turn to page 10. From here, let me explain situations apart from financial results, starting with the Japan segment. Page 11, please. In Japan, business environment continues to see solid demand, and the Q3 did not see any major changes, so let me skip this and move on to page 12. In terms of our efforts, NTT Data Group is working on the midterm plan by setting out quality growth and by providing greater value for clients. We strive to balance sustainable growth and profitability. As shown here, to help clients address their challenges, we provide consulting-oriented proposals and with the ability to implement the latest technologies to provide the best services and solutions. We continue to make efforts to ensure clients can deliver their outcome. Also, through asset investment, we will accelerate initiatives to help clients swiftly deliver outcome. To deliver quality growth, a collaborative project with Hakuhodo was announced the other day. As shown here, demand chain transformation is to understand the value chain with a customer-centric approach to help clients grow their sales and profits. Through this partnership, we will combine Hakuhodo's deep consumer insight-oriented creativity with our IT-driven business transformation to help clients transform their demand chains. Please turn to page 14. Let me turn to the overseas segment. Page 15, please. This slide describes the overseas business environment, same as Japan. In Q3, the segment had seen no major changes. However, in light of the change of the government in US, we will need to monitor its impact closely. Please turn to page 16. With this slide, I will explain an outline of the large deal win in North America. This is from an existing client totaling over $500 million, a long-term and expansion contract, helped by strong partnership for building multi-cloud environment, solid track record as a data center operator, and our ability to provide full-stack services. Going forward, in North America as well as other regions, we will continue to focus on key clients' large deals by promoting strategic initiatives. Please turn to page 17. Next, let me update on the data center business. In Q3, we spent $1,624 million, with orders recorded at $2,463 million. Orders year-over-year declined by $1.3 billion. However, in the data center business, large client contract timings could largely impact the volume by quarter. Therefore, this reduction was attributed to the previous fiscal year's large contract win. Total contract value steadily increased, and from Q4 and onwards, given the pipeline built up solidly, the data center business is continuously expected to enjoy brisk demand. The latest update includes NTT DATA being selected by Tochigi City to acquire land for the new data center. This land will be developed as a metropolitan area's new data center location. Details can be found in the URL linked to the news release. Please turn to page 18. This shows the financial performance of the data center business. Q3 recorded sales of $1.79 billion with EBITDA of $637 million. EBITDA margin was 36%, operating profit $302 million, and towards a full year forecast, both sales and profit are on track. Please turn to page 19. Next, the overseas business transformation status. Up to Q3, for optimizing corporate functions and IT systems, we spent 15.2 billion Japanese yen. Against the annual plan, the status progress is up to the plan, and in fiscal 2025, we aim to generate synergies by continuously pushing forward our initiatives. Page 20, please. Next, let me cover the company-wide initiatives progress status. Page 21, please. This shows our efforts on GenAI. Our GenAI-related business includes a project for Continental to apply AI in automotive product development processes and a project for JAL Card in using AI to enhance customer referral business. Across the globe, cumulatively, around 1,000 projects have adopted AI so far. Also, AI agents are expected to provide a new labor force, which we have defined as Smart Agent, under which NTT DATA has been rolling out services globally. AI specializing in sales called Litron Sales was launched last November, and many inquiries have been received. We will ensure that we respond to such strong demand to grow our GenAI-related business, aiming at 300 billion yen in sales in fiscal year 27. Page 22, please. Let me cover financial expenses, losses, and corporate tax and others. In Q3, we posted financial losses of 59 billion yen, and our annual guidance is 81 billion yen in losses. Thus, it is in line. The corporate tax expense rate in Q3 was around 49%. Again, it is on track towards the year-end plan. This concludes my presentation. Thank you for listening.